advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. I don't know whether you can see him there, but Kai Chen, Halloween themed, in the dark room in the booth. Some small technical issues with the camera there, but he is there. Basically, be alert, but but not alarmed is essentially the theme for this week, because we've had a few things, go, back and forth. Aussie market, I think, finished pretty well, which doesn't surprise me in the slightest. But we are starting to see cracks show in the US, particularly due to the fact that we had some pretty good bank earnings and at the start of the week in the US, and then essentially as the week went on, we got some regional banks through, and that really smacked up that banking sector because they had a lot of credit provisions in there that weren't particularly good. And after that First Brands blow up recently, that really scared people quite a bit. So essentially what that's where you're seeing the weakness there in the US stocks, and then the technicals turning to a strong sell. I mean, commodities have just been on fire. So
keeps going.
That's where,
Gold and silver last night, right? Another 3%. And the interesting thing was, I was actually talking to another.
I can't speak because I'm smiling so much.
Yeah.
But
I was speaking to someone else today, and we were talking about the physical bullion stuff. And basically, she was saying that there was a line outside of the physical bullion dealer, and it was mental.
Oh yeah. And shout out to Daniel, who wrote in, who's one of the viewers or listeners. He works at Jaggard's Bullion. And last week, JT and I were just mucking around. I said, they're probably AI generated, those cues. And he wrote me an email going, no, they're real. And then I actually went into Jaggard's this week, because we do have some clients who want to buy some physical bullion, and had a chat with their CEO and things. Yeah, but shout out again to Daniel. And yeah, we're going to do a little bit of an educational podcast or explainer on how you can go in and buy, how easy it is to buy physical and coin investing and all sorts of things like that. So I think we're going to record that maybe next week. And I'm going to drag JT along to that one, because he's team gold, I'm team silver. And I'm winning at the moment, just quietly, for the first time in about 3 years, and since we've been sitting next to each other. But that'll be a little. Well, we might have to jam it into the podcast and show you guys later on. But yeah, the things that come of saying stupid stuff on podcasts, I suppose. But yeah, look, as far as the equities go, it was pretty quiet leading into this week, and then you can just see here, Nvidia and the Mag 7 were down, but the banking sector is the bit that is concerning, because they all beat expectations by a lot. And then the regional banks stuff came out, and the whole thing turned around only in one night, last night, which is concerning. And us being old credit spread traders, Kai, we've probably got a very sensitive nose to this stuff.
Smoke, isn't there?
Yeah, a bit of smoke before the fire. But I did bring this up on the podcast last week, that the First Brands thing, where UBS was 30% of it, and private credit could be mortgage-backed securities in a different wrapper and things like that. So we've been using this slide a bit, just to let people know, but and give them more regular updates on credit spreads, basically. But the orange line's the S&P, and then the blue line's when credit spreads blow out. So as you can see, fairly reverse correlated. And this little thing was 2 or 3 bars last week. It wasn't Wells Fargo. It was two of the smaller banks, Zions and Western something, and they basically had much higher than expected credit provisions and write-offs, and then Jamie Dimon's awesome quote. It was and what was it? Something about that's the problem with cockroaches. If you see one, you've probably got a lot more, which is pretty and with the lack of transparency in private credit funds, at least the banks have got a report. Oh my lord, what could be hiding under the surface could be a bit concerning. So yeah, it's as you can see here, not good rated like AA bonds in the US. We're only up about 3 basis points this week. This month, whereas triple C rated, which is not junk, it's still at least rated. Oh, it's kind of junk. Is up more than 30. These are pretty delayed as well. These numbers, they're quite hard to get. It's from a great little website, which I call Credit Spreads or something, which I've been tracking for a while now. They are on 24-hour delay, so I would expect that number in the triple C rated to probably go another 10 or 15 basis points. So, soon, like where credit, when credit freezes, that's the blood of the market. It's like losing too much blood.
It's how funding works, right? Basically, the whole financial system is based off the risk-free rate. It's how much you can borrow that money at, right? So as basically, if you run into credit issues and the credit spreads start to blow out, basically short-term funding goes up, and there's a cascade effect across all of that, right? So banks can't borrow at cheap rates. People who are borrowing for investment loans, properties. Basically, the whole financial sector is based off that risk-free rate. So it's it has widespread impact if it does blow out.
Yeah, and look, we sent out a note to clients today, basically just going, look, be alert, but not not alarmed, sort of thing, because these sorts of things can come and go. We did have we were concerned about about credit. What was it? It would have been 18 months ago or something. And it was just an isolated incident. And then I sort of said the same thing on the pod last week. Is like First Brands could just be isolated. It could be just one bad actor. But then Jamie Dimon flagged that JP Morgan smashed expectations, but then the stocks went down because he put a more credit provision in, and then the regional banks as well. Just what, when an isolated incident becomes a pattern, you got to start to be a little bit worried. And then you add on top of the fact that the S&P is up 36, 37% since April, which stands as the so I did the stats on 30 years, but then I did run it. I was using our in-house AI, and then I went, what about 50 years? And it still was the number 2 rally over a 6-month period. And the number 1 6-month rally and the number 3 6-month rally were from out of down 50% moves, not down 20% moves. They also didn't have a industrial revolution style thematic behind them either. And a weakening US dollar, which obviously makes it cheaper for foreign sovereign wealth funds to buy US stocks and things like that. So but that 37% is enormous, basically. I mean, even just to go back to this high is an easy 10 to 15%. So we're just sort of saying, given the context of the last 50 years, there's only one occasion, and it's only 8% away, that's ever been better for you to be probably just trimming and taking some risk off the table. And you've got, you just got a whole range of different things going on. The US government shutdown, which is going to continue now for probably 5 more days because they knocked it back in the Senate last night. Credit spreads are widening, which is never a good thing. Trump's basically restarted the trade and even called it a trade war with China yesterday. The tariff situation hasn't been solved, but there's still only 4 or 5 deals done.
Exactly.
Yeah. So, and even Trump's offsiders that normally calm him down and are the adult in the room actually had a shot at China this week. So, it's one of those things where even a slight breeze could turn this down. As you can see by that, that big green line there. And even if it falls halfway, that's still a lot, right? That's nearly all of that move there that happened in March, April is around about half of this. So you think back to what the panic was in April, and that's only halfway down. So yeah, it was just a little bit of context there, basically. We essentially, instead of doing a trade of the week this week, we're just doing a review. Basically, our trade of the week or our recommendation for the week is go and review your portfolio. Spend half an hour to an hour on the weekend with the goal of probably returning to high levels of cash. Check on your holdings, or sell some profitable ones, get rid of your unwanted ones, and compile a list of stocks of what you want to buy as you get that cash, and for your future reference. So you create a plan for if the market does fall. And again, we're not saying it's going to fall, but better to be prepared than not. But just don't do nothing.
I think there's a great value in terms of planning, right? So that shopping list, I think, we are coming into a bit of turmoil, right? So, obviously the last week we saw the market turn. It might be too early because, like in terms of where the market goes, it could bounce out and go another 5-10%. Who knows, right? But I
Yeah.
think having that shopping list there is the key thing because, like by planning ahead, when that market correction happens, you know exactly what to do. They are probably the biggest value piece, right?
Yeah. I mean, we do this exercise 4 times a year, and we use it
Yeah.
probably 1 in every 8 times. But we did go to cash here, and then we had the plan, and I clearly remember that morning that we bought index at 7,200 in the Aussie. What are we at 9,000 now? And I said we've got to stick to the plan, boys. We're buying the gear, which is the leveraged long ETF in the Aussie market. JT looked at me and went, "Are you crazy?" And I was like, "No, we've got to stick to the plan." On the inside, I was freaking out. But that was literally that low that day. Your planning before the move happens is always so much better than reacting. So yeah, it's more of like I said, we're not saying the market is gonna drop 30% or whatever, but there's just a lot of things adding up in the background, and it's definitely worth having a bit of an emergency plan. It's more of a to-do list rather than it's not writing your will. There's definitely reasons for it to sort of to do it. And yeah, look, we haven't bothered with the because we've obviously just talked about the banks in the US and the earnings reports, and we sort of covered that. There hasn't been much news in terms of OpenAI, M&As, or blah blah blah. There's been very little corporate news in the US, to be honest, and this week, and those positive earnings from the banks have now basically succumbed to fears on regional banks. Treasury wines took a big dip and has bounced back a little bit this week. I think you had a bit of a look at that, didn't you, Kai?
Yeah, they downgraded their next year expectations because the main thing was Penfold. Obviously, it's again related to the China thematic. The Penfold line is their flagship, and that's really what's been carrying Treasury wine. So yeah, it's been a little bit softer than expected, and I think they're worried that providing a guidance now is not really a smart idea. So I mean, it's really in terms of the price, I think it's already priced in because it's taken a bit of a beating from when
Yeah,
about
the chart
half a
looks
year
horrible,
ago. So
and
yeah,
and I don't know what its trading price to assets, but I mean we've liked it for a while. A few people have got it here, and we don't mind it on a long-term basis. But this, I mean, it's just a big transaction to eat that Dow Wines. Like, what is it, 1.6 billion that they bought? And I'm pretty sure, I think that was Aussie. I don't think that was US. But it's a cyclical business now because they bought a premium wine brand, which is $50 to $100 bottles. They are benefiting from the tariffs, but then they were going to benefit from the tariffs, but then they came to an agreement with Europe. But you tend to buy a cheaper bottle of wine if you're doing it tough, right? So I think the economic cycle is not necessarily favouring them either in that premium part. So look, Telix.
Yes.
Yes, it was a joyous occasion this week, being able to give the haters on social media a bit of comeuppance, because they all saw that stupid move in Telix to the downside, and then were like scrambled to find reasons, and they're like, oh, they're going to be affected by tariffs, and they're going to be, and it's like all of it was crap. And if I don't look, even if I do say so myself, I was right, you guys were wrong. Sucked in, and bounce she goes. Performed very well this week. I'm not
Yeah,
petty at
they
all,
had an
Kai. I'm not
upgrade
petty at
in
all.
guidance. I think it was they raised to about 820 million for guidance next year,
Yeah,
which is probably like, was it like, I think it's like 40 to 50 million higher than expected, right? So
about 50 million higher. But everyone's going, oh, they're going to downgrade and blah blah blah. And it was just panic stuff. So and look, I've got to say, major relief on my part, because I really went out on a limb and defended the company and did a lot of work on it, and there was an element of like, whew. But there was some pretty. I got pretty savaged for about 3 weeks on Twitter and stuff. And every time it was down, I'd get tagged in like 5 posts, and I'm like, Jesus, like almost felt like I was bullied. And I think there was too much other corporate news, to be honest. I mean, there's been a lot of more of the same. Gold stocks up. I mean, commodity stocks up. I think ANZ had a bit of a run up this week, and things, but that's why I kind of flicked to the commodities part. Like gold and silver are just unstoppable at the moment. My old mate Silver, Team Silver's finally come good. I'm sad that JT's here, because it's the only week I've ever been in the lead. I don't know where we are exactly right now, but we're well into the 50s, and it's been an outstanding rally, and it just every night. 53.40 now already. I don't know where it got up to nearly $54. I mean, a month ago we were at $42. Yeah, been waiting a long time, and I still think it might continue. To be honest, if now it's consolidated above 50. So, but if the government shutdown gets resolved, I think, and then Trump parks his ego on the trade tensions, it could easily slip back quite quickly. So we did do a bit of trimming this week, but I think things like cyclical metals like copper might suffer. However, I was tagged in a post from my old mate Shane Davis on Twitter. Shout out to Shane. I know he listens, because he picks me up on all my mistakes all the time. He tagged me in something saying that there's a prediction here of stay with me 1 sec. I'll just find it. I think it's the largest shortfall is predicted. Morgan Stanley's forecast that copper production will fall short of demand by 600,000 tonnes, the biggest supply deficit since 2004. So normally it's, I've been calling a supply deficit for about 2 years. But look, I think copper's been the quiet achiever. Everyone's been talking about gold and silver. Like that came back out of the low 4s to 5s pretty quick, and that shortage is real, and they do need it for a bunch of different things. So that could be good, really good for the likes of BHP and Rio. I think we bought some Rio. You were suggesting Rio, as I recall.
yeah,
We went through it a bit. Yeah, there's the junior mining sector's back, baby. I'm in Australia. Although the mining sector in the US, because they've got so few choices, there has been some extraordinary moves. So I think we did that. We trimmed that US antimony that we bought, and we had on for a week. I think we made 40%. It was trade of the week a couple of weeks ago. I think when we sold, I think the next 2 nights it was up 15%, both nights in a row. And then on the third night, cratered 25%. So, we obviously just like to stick to our targets. But yeah, and then Bitcoin drifted off this week, but it has recovered a little bit. Uranium was on fire again until last night, as was lithium. So yeah, look, and we'll have a bit more of a detailed digital assets and crypto section because we've had Finjud Eljab join, who was going to stick around for the podcast. We're a little bit late, but has joined us at MPC this week. So he's our he's been trading his own money in crypto since he was a young buck. I actually met him when he was like 14 years old, and we've always kept in contact. And now he's in his late 20s. So yeah, we'd be so not me and JT, the old blokes, not covering. I know JT likes the crypto space, but probably a little bit more expertise in the space, so people can get their head around it a bit more overall. But is there anything really, anything you really brought, came to your attention this week, Kai, that you want to let the viewers know about? Anything about?
Yeah, those big macro plays, right? I mean, on the smaller end front, it's really more of the same. Some of the defense stocks have actually pulled back. So I was looking at EOS today, and that's fallen back from the highs. It was getting a little bit crazy, and you know, really the only three thematics which we've picked really well, defense, gold, AI, they've all been on a tear, but I think the defense is still doing a little bit of correction because I think it's
Yeah, they're
gone.
running out of steam. Poor old Drone Shield's gone to the dogs since I interviewed their CEO. He was in the Fin review the following weekend, so I'm going to blame the Fin review. But I think that's more the market getting carried
Yeah,
away than it is like. I mean,
absolutely.
he can't control that.
I still think it's a very strong medium thematic, right? I just think that the market always gets carried away both on the upside and downside, and the defense
Because that
thing
thing was
ran.
60 cents
Yes,
this year. I think
crazy,
in May that thing was 60 cents. It's a
mm,
10 bagger.
crazy.
And look, I reckon he's doing great things. That's civilian part of the arm. I'm really relieved that it's actually getting because we don't have it on anymore.
Mm,
I mean, because no, you can't predict a move like that. Like
yeah,
it's just when the market's and EOS as well. I really like EOS, so I'd be like definitely a dollar cost averaging situation on small size and add to it
hmm
over time. So, maybe a 0.5% to 1% of your portfolio, but if that, but and then average in over time and look at it on a long term view. I know some people don't like averaging, but so well, Kai, we used to trade together, right? Back in the day, you used to trade at my old prop shop. There was averaging, which was like being stubborn and just buying more, and which we called the dirty average. And then there is planned dollar cost averaging and scaling in and out. So particularly when you had large positions, you had to scale in and out sometimes as
yeah.
well because of liquidity
You're
issues.
never going to pick the bottom, right? Like, and this is the thing, right? Like, you're never going to pick the bottom. You're never going to pick the top, but you can capture a zone, and that's really the use case, right? Because like,
Mm.
if you have conviction in terms of, you have a gut feel all based off your analysis, where roughly there's a dislocation against fundamentals, you want to start executing your orders because, yeah, exactly. Don't try and time it to perfection because that's usually when you actually miss the whole move, right?
Yeah, and then it becomes really binary. Like it's a question of then you either get it right or wrong. Like
Yeah,
the idea with investing is to make money. It's not like it's not to have a pub story where you pick the absolute low and pick the absolute top. You can do a lot more trades, and that's where even our clients still don't really get it. Like with Telix, for instance, we bought some at 25, we bought some at 20, we bought some at 17, and then we bought more the other week. But that was the plan. Like from the start, it was like we don't think it's going to head up anytime soon. It's been to $32. We'll start buying at 25, but we'll just do a quarter allocation. And then I got to 20 and we bought some more, and then we got 17 and then I got a little bit scared, but then we switched out of clarity on the 7th, which went on a stupid run to the upside, and then we switched into more Telix, and one went one way and one went the other way. But at the end of the day, both those companies are going to broadly head higher over the course of time, and that's the advantage with our high conviction stuff is we have buy zone, we don't change the stocks where we have buy zones and trim zones and sell zones. So if a company gets overvalued, even though it's a high conviction pick, it doesn't drop off our list. It's just like, well, it's overvalued at the moment. There's no point holding on to something that's overvalued unless there's an absolute reason to. And then we quite often get out. And then when it drifts back into the buy zone or the add zone, we add to it again. So it's a little bit different to how other people do it, but we just identify the fact that markets have ebbs and flows. And, you may as well profit from them in the meantime, and manage your risk because, it's like the CSL holders, for instance. What have we rolled CSL around like 800,000 times? But we're now long and effective. I think we've rolled it for 40 odd bucks at least 4 or 5 times at MPC, and we're that over time, and then we've only done it on half. So effectively, our average now is well deep in the money. So we're not panicking. We bought some more the other day. Was it 190, 190s?
Yeah.
I don't know where it finished this week, but I knew it was heading higher. We kind of like healthcare, so yeah. Oh, and mate, this is your time to shine. So
finally,
to all the viewers, you're speaking to the world's best app developer, which is why he hasn't been appearing on the podcast, because he's had his nose down in this. So we built this from, well, when I say it's the royal we, Kai's built this from scratch. And it's in an effort to, the incumbents platforms in the world aren't particularly innovative. We're ex-traders, so we wanted something aimed at traders and better communication, etc. So at the moment,
I think the key value at the moment. Yes, exactly. So I think the key value is at the moment, we're doing a lot of great work. We've got so much content, and the research that we actually do is very good, and we're getting it right. But the issue is obviously
it's a good time. It's a good time to subscribe.
Yeah, so I think
maybe 18 months ago I might have passed. I think I was having a bit of. I was calling it like a busted. The last 6 months definitely been good.
So I think it's better to actually streamline the communication with all our clients and prospective clients. It's a fantastic platform, and it's a work in progress, right? So this isn't the final product. It's a growing platform. But what it allows you to do is, all our content is in one place. We have the communication. So if you like our content and want to know more and how you can profit from it, it's a perfect place to be. And we're all on it. All the advisors are on a Mosaic. You can chat to them.
Yeah,
You can get all the recommendations.
Even if you're not a client, you can still send us in. You can get a free trial, but you still get all of our content, but all of our podcasts, all of our videos, all of our special reports, our education section, that's all in there. And if you want to have a look at if you want to sign up for a free trial and try it with the recommendations as well, just send us an email. Send us an email at mark.gardner@mpcmarkets.com.au or kai.chen and know the rest, or inquire via the website. But we're happy to let you have a look. But it's got a phone app as well, so the recommendations get pushed to your phone. You can click approve if you've got an account with us. But and we are working towards, which will be when it's very useful for the general public, is we've got an in-house AI that that you developed. I keep saying we, but I just got to be realistic. And it scrapes the company announcements as they come out. And if we're holding it, we get a full summary. And those summaries are unbelievable. I can't believe, and they turn up and let you know what you need to do, straight away. So
this is scratching the surface. I think within the next year, the amount of features that will come out will be incredibly valuable for all the investors. Yeah, I'm really excited. So this is just the start.
Look, it's been a fair bit of hard work, and thank the Lord for AI, because it's made, otherwise these sorts of things would take $1 million and a team of 10, which you can now do. And I have said this to a lot of people before, what you've been able to do largely on your own, in such a short period of time, is you would never, pre-AI, not a chance. Like,
I'm incredibly surprised myself. I think, yeah, you're exactly right. I think we're in such a great opportunity, and it's definitely an era where if you've got the right idea and commercialization plan, you can make it live.
as Sam Altman said, it could be the first time in history you one-man billion-dollar company. I mean, mate, so it's a two-man $100 million company be great for me. Named NPC, and then here we are in extreme fear after dithering in the neutral. I believe. I mean, I was bearish last week. JT was bullish, but I was not a. I was not. I wouldn't say I was a. Wouldn't say I was overly. I wasn't a confident bear, but yeah, I think JT was pretty neutral when we spoke to him today. He's pretty busy with the call and stuff. But yeah, so he had to head out this afternoon. But I mean, I'm still bearish, but more so from a. I'm not. I'm worried about all of these red flags. So I'm not necessarily saying it's going to be like it's going to be down next week, but I couldn't, in good conscience, give anyone the impression that I'm positive on the market. So I mean, this thing could disappear into the background, but there's a lot going on. So making these bullish and bearish calls, but I think the risks to the downside, personally. Yeah, what about you? This is your first time in a long while. I don't know what you've actually. I don't know. Not.
I'm actually fairly bearish. I think, obviously last week with Trump coming out, the market tried to bounce on Monday, but it wasn't very convincing. So like I think and there's a lot on the board, right? So like all the trade tensions are still there. As you said, credit spreads today going higher. So there's a lot on the board, and yeah, I'm fairly bearish for next week.
Yeah, I don't. I just look. I don't want it to go down necessarily. It's not a. I'm not wishing doom and gloom on the market. I just think the risks are super high, and that credit spreads thing worries me. I mean you know that that stuff when people start defaulting, it's not a good thing. And it does, and then what happens is it snowballs because it becomes contagion. Then people start calling in debts they would normally just let run and things like that. So it kind of causes a bit of a rolling effect in a way. So like I said, I've been monitoring it, and every time it kind of moves, I've been covering it on the morning call, because I was just like it's worth watching. So yeah, I think that and Trump saying stuff about China or tariffs or whatever. Like I mean that I mean they're fairly big things, but they're not the entire systems freezing. That's what I mean where it's snow. But two banks fell over and a year passed before the GFC got rolled into dumping. Michael Burry bought his first credit default swaps in 2005. It didn't fall over until 2008. So you just got to be mindful of not missing out either. I did a little bit of a markets movie marathon the other day. The Big Short into margin call into arbitrage, which was very interesting. Margin call's great. It's Jeremy Irons, one of his best ever. And yeah, we got this calendar for next week. There's a fair bit of earnings, but earnings does stabilise the market quite often. It's one thing really sticks with me that JT said. He goes that we don't tend to make big moves on in earnings seasons, so that may stabilise things a touch as well. But Tesla, obviously, big. Netflix is big as well. You got a couple of the brokers. What else we got there? The Procter and Gamble will probably be pretty interesting to see because we don't need a disaster in the healthcare sector because I think it's willing to bounce if it's let to bounce. But again, guys, ignore the Columbus Day bit there. That's my poor cutting and pasting. But no economic figures. This is weird. Haven't really lived in a world where we've got no economic numbers, to be honest. So it's, who knows what's going to happen when we come back on. because there'll be delays. There'll obviously be delays in releasing the numbers, and the revisions will be all over the shop. So, but I dare say that Netflix and Tesla will be majorly watched. On board $680 million worth of components. No, I'm misquoting that. He did a massive deal to build. It was either he spent $685 million or he's gonna make 680,000 robots. I can't remember. I'm so sorry, people, but it's a huge order that leads us to believe that this Optimus launch is going to be pretty imminent, and he may be able to deliver like a whole bunch of start delivering a whole bunch of robots leading into basically next year we're talking as well. I saw the earnings results from TSMC this week as well, despite the fact that it actually ended up falling, but they basically had record volumes by 20% or something silly. It was a $685 million order, which is sufficient to manufacture 180,000 Optimus units. So that's a lot of robots. So apologies for stumbling through that to get to that, but the AI thing as well. The TSMC, I mean, they got caught up in the sell-off last night, but they were up about 2 or 3% leading into that. ASML said record orders as well, but they're concerned about China and they see significant drop in China later, in the coming year. I'm not entirely sure why, but I didn't give too many specific reasons. But but I think we might wrap it up, mate. We've had an enormous week, and we got to get ourselves out of here and get some sleep or something. It's been one of those weeks. We're both bears. Well, I'll keep track of that, and we'll speak to everyone next week.
Thank you, guys.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.